Hey, Dental Nachos Universe, it's Paul, Dr. Nacho, here with my friends and sponsors from Doc2Doc Lending. They help dentists and doctors with the surprise toppings of life. I'm gonna let them introduce themselves, who they are, a little bit about their journey, why they started this. I'll start with you, Zwade. Introduce yourself to the Nachoverse.
Paul, thank you so much for having us. It's always a pleasure to be with you and your Nacho crew. I am Dr. Zwade Marshall team. I'm an anesthesiologist and interventional spine specialist. I'm in Atlanta, Georgia. It's a lovely 71 degrees today and happy to be down in the Southeast.
Yeah.
I run and own a spine center with a surgery center and 2 clinical locations here, as well as being the co-founder and CEO of Doc2Doc Lending, where we provide personal loans for doctors for all needs that they have, the life toppings, as Dr. Goodman just said.
Yeah.
And so we're happy to be with you all to kind of talk through this current financial market, some of the stressors of a rising rate environment and what it does for folks that are seeking capital, because it's the busy time of year for doctors. We're all having patients coming, they're needing their oral implants done now. They've met deductibles, they want to get their cleanings and stuff done. And you're also going to be cash crunched because capital sourcing is really, really tough right now because of what's happening in the marketplace. So we'll talk through some of what we're seeing and be a resource for your audience here, Paul.
Love that. Before I go to Kent, I want to share, I don't know how medical school was, but my dream was to play professional basketball. It didn't work out at all. When you grow to 5'9", you need to get new dreams. But I share in medical school, they have a lot of courses on. Yeah, Iverson.
You're a Philly guy.
Yeah. I got a Nacho basketball here. But did they have a lot of courses in medical school about financial fitness, understanding money, Zwade, or was it like dental school where we had, as my grandmother would call it, bupkis, which is Jewish for nothing?
There was nothing in medical school. So Kenton and I both went to business school because we had that itch of learning a little bit more about business and finance while we were doing our medical training. But to your point, there's no real curriculum around personal finance, understanding lending, understanding insurance and insurance products, contracts, negotiation, all the things that physicians and dentists are battling. We have to figure out on our own. And there's no good one-stop shop resource. So our team at Doc2Doc takes it upon ourselves to talk through some of the information asymmetry that exists between the doctor and lenders. Our process is very transparent, intentionally so. We want you to know what an APR is and what's an interest rate. We want you to understand exactly how to compare one loan offer to the next without tricks or gimmicks. And so, to your point,
I like it. We'll call it the fundamentals of financial fitness that you guys teach there. I like that a lot. We don't learn that in our training, and it just really causes a lot of pain and challenges later. Kenton, did you also sign up to work on your patients while they were asleep in your profession?
I did. Although I do like speaking to people, so it's a little misleading. But yes, I'm also an anesthesiologist. Zwade and I trained together in our residency training, but I practice in New Hampshire, practice anesthesiology, and dedicate the balance of my time to Doc2Doc, and kind of fell into this not intentionally, but really based around what was the most stressful part of my medical training. Certainly the clinical piece was tough, but for my wife and I, the toughest part of our early journey was financial, and felt as though there were some inappropriate risk calculations in the general market that we could do better. So that's how
I appreciate it. And my grandmother Baba, who did say bupkis a lot, she thought it was the most interesting boy in the world. But just in case you turn this off now, you can text lending. My team made me this cool sign to 215-543-6454 to learn more about what our Nacho sponsor Doc2Doc does. So I want you guys to kind of take us through these bullet points, in whatever way you would like. But before you go through these bullet points, they hear Doc2Doc, we hear we have financial challenges. This is very on brand for dentistry, but what was the why in a story-based world, whether it's your own personal story or people that you've helped Nacho dentists in this community get equipment to be traveling surgeons, to deal with the challenges of life. But maybe Zwade, just in a story-based way, what was part of your why for saying, I got to create this resource for this community?
Sure. I am from a single parent household. I'm an immigrant, moved to the United States when I was 17 from, you might hear a little accent, a little sing-song accent. I'm in the Caribbean, and didn't have a whole lot of financial resources from my family members. So I had $212,000 of student loan debt when I was graduating from medical school. I had a FICO score that was considered to be subprime, and my income as a resident at Harvard was going to be $54,000 a year. So I'm leaving Emory in a low cost of living city, Atlanta, celebrating the match because I got my top choice, and going to move to Boston, and had to apply to borrow the money to fund that relocation, first last month's rent, and the initial kind of setup costs within the Massachusetts. And I was surprised to realize that banks looked at me as a high credit risk. They thought that I wasn't going to repay the loan because I had immature FICO score and relatively low income with a debt to income ratio that was askew. So Kenton and me, Kenton had a similar experience, but in a different context. We talked amongst ourselves and amongst our peers within our residency network. And so many of us had similar financial hardships. And we decided that underwriting a physician, a dentist, it's the usual credit algorithms do not account for the fact that dental education is extraordinarily expensive. You're mortgaging your youth for this lifetime of future earnings. And at the time we need to get the money, we're still in that mortgaging our youth period. And so someone needs to understand how to invest in doctors to get us through that hardship period, and knowing that we will not default in debt the way a FICO score might predict.
I always said that, and we were preparing for this at the team meeting this morning. It's nonstop fun here at Dental Nachos, as you expect. I said, to get into the mindset of our dentist or young doctor. I mean, many of my team members, they've been working after college. They know what it's like to have income. And, for 4 years, whether we have this great promise later, I remember having to ask my parents for like $50 to go out with my friends when I was in dental school, and they were all making money. And it was just demoralizing, right? It just was. I was like, I don't know if I can make it to dinner at TGI Fridays. Let me ask my dad for money. And I mean, it's just something to put into context, dentists, doctors, that you are 22 to 26, 23 to 27, when other people are earning income, and it's tough. So I appreciate you sharing that, Zwade. Kenton, how about you? Oh, go ahead, Zwade.
It's particularly more challenging for your population too, because for a lot of physicians, residency is a paid slot. Many dentists are paying to do residency as well. And so it's a protracted period of just expense. And so that time in which earnings begin, it's just so much farther out. But to your credit, as a profession, you guys tend to be a lot more entrepreneurial. You leave training and open up shop a lot faster than MDs do, and so you kind of bridge that gap sooner than many of us do.
Yeah, that's a good point. I totally agree. Well, we have to. We work in these, solo businesses out there. There's no giant hospital where, we have to figure out how to order the paper towels, referee puck fights between our team, and do the work. Kenton, what's one of your why stories, whether someone from you or someone who's you helped along the way, about why you guys created Doc2Doc?
Yeah, no, my story is really similar, Paul. In fact, that's what brought Zwade and I together. I moved from Dartmouth to Boston with $225,000 in debt, the same salary that Zwade had, $54,000 a year. He didn't get a bonus for being chief, so we made the same amount. But the personal and professional goals that my wife had at that time, we had two kids under the age of 3. She was a nurse who supported me through medical school, and she wanted to advance her career while also, we wanted to grow our family. And if you crunch the numbers, we couldn't keep all of our goals on track. So we had either the decision to pull back and let go of some of those aspirations and slow down some of our personal and professional goals, or find a way to supplement my salary. And similar to Zwade, when I went out to see what those options were to supplement my salary, I was viewed as really high risk, which seemed unfair, because at the time it seemed like a pretty positive trajectory. From the time we arrived, there were job offers coming down the pipeline. And so And so the banks seem blinded to that. And as we spoke with our peers, as Zwade said, we found that it was more common than we had realized. And so circle back a few years from then, and we started Doc2Doc lending. It kind of looks at the whole picture differently, and again, with the goal of helping to fuel personal and professional goals.
Yeah, I mean, it's a morale money-based thing. We're going to go through these 4 points of financial fitness and fundamentals in a second. But just if somebody was popping on right now and say, what does Doc2Doc do with details? I want you guys to say, what is the loan amount people can get? If you just give us a little bit of a summary. And then I also know that you do have a residency program angle coming in, or you might have something new. This is an update for us. I want to share with everybody watching. Doc2Doc has helped Dental Nachos dentists already, and we're looking to help more. But just kind of give us an update on the loan program.
Sure. So we're a lending platform for doctors, and we lend established physicians that have a practice or a job already up to $100,000. Established doctors, dentists as well. And the interest rates go from 7.9% to 16.9%, and it's a 5-year fixed rate loan. So in a rising rate market, whatever rate you get approved for, it will not go up. It stays the same over the entire 5-year period of time. We're able to have a borrower submit an application. It takes them about 3 minutes online. It's all online. And get an approval for them within about 12 hours and can disperse funds in as little as 5 business days. There is an origination fee that's 2%. That's baked into the total cost of the loan. It's the APR is well kind of publicized in the loan term, and most importantly, we have no prepayment penalty. So should you borrow the funds and you have some extra liquidity in a matter of a year after you borrow, although it's a 5-year term, you can repay us at any time without us charging you any fees for the interest that we lose by you paying us off before the 5-year term. And so it's a loan with flexibility.
Love that. And people can text lending to 215-543-6454 to learn more about our awesome sponsor. My team will drop this in the chat. Also, if you're watching on Facebook Live and Zoom, you want to ask a question, we'll have time for that. And I want to just kind of catch people up to, one of the greatest stories working with you guys is it's a positive one. Someone needed this to buy equipment to be a traveling implant surgeon, and there's just no way to get $30,000 or $40,000 by working one day and saving a little bit of money, working one day and saving a little bit of money. But when you can come in and get that funding and then go make $300,000 or $400,000, like you had said, Zwade, they want to pay it off in the first year. Maybe they don't. I haven't checked in with this awesome dentist recently, but they were really, really thrilled that you guys had come through for them at a time where they could not have gotten that money before without Doc2Doc. Kenton, did I miss anything on the product details? Asking Zwade from the $100,000 to the APR. Anything else you wanted to add?
Yeah, no, Zwade outlined it well. I will mention what the rates generally are, and the reason I bring that up is because the last time we were on here, Paul, it was through a Facebook Live with a chat discussion. And there was a lot of great discussion about whether Doc2Doc offered competitive interest rates or not, and a lot of that discussion was centered around consumer loan, unsecured personal loans, which is what we offer, versus secured loans, loans that are secured by an asset, meaning a home, a piece of real estate, a car, rental, etc. And the differences between those rates can be significant. So people, I think, are generally used to seeing practice loans, mortgage loans, which are also rising, but tend to run now in the 6 to 7% in this environment, versus personal loans, of which the rates are generally higher. So our rates at Doc2Doc, the lowest rate is 7.99, and it runs up to 14.99. And the reason for that is because there's no asset through which that loan is backed. Basically, the guarantee is that the doctor who's applying for that loan is the body that's guaranteeing that payments are made on time. And we believe that doctors are uniquely credit worthy and low risk.
Doctors, they like to do the right thing. They don't want to miss a payment. They don't want to have anything out of place. You can really leverage their desire to check boxes and, not get a bad grade on any test in life. So I think that's, in a funny but fun way, kind of a cool thing where your community at large.
That's right. I will say, though, that in this market, with inflation doing what it's doing and some of the pressures that we're having, some doctors are having hardships, right? It's hard for cash flow and they're being squeezed. And so we'll see folks have delinquencies. And a part of it is that because we're all so busy, we'll forget to turn on auto pay. And folks go delinquent and it becomes like sloppy payment history. And so a part of what we do is we kind of coach folks through, hey, is this really a sloppy payment because of forgetfulness, or is there a hardship? Should there be a hardship, we also offer hardship programs to ensure that it's a humane, empathetic lending platform. So often, Paul, our borrowers that have a hardship that let the loan go into delinquency are actually embarrassed to take the call to say, hey guys, a payment didn't come through from a hospital that I work for. I've been waiting for 90 days and I'm struggling. They don't say that, right? Until you kind of got to force it out of them. And as a peer group, we're trying to demystify that process and let folks understand, as a lending company, we see all of this, the good, the bad, the ugly, and we're all in this together. And so I know what it's like personally.
Yeah, I love that attitude. Well, I know some of my teams on this call, but they love details. Dentists love details. So we're going to dig into the details. I practice spinning this basketball on my finger, but let's go through some of these great objectives you guys came up with, because I know people listening, and I say this in a facetious way because this is important to know. Tell us a little bit about the variables to compare financial products: personal guarantee, origination fees, prepayment penalties, APR versus interest rate, term and fixed. Even if you've gone over this a little bit, maybe you could just give us a reinforcement of what you would like our audience to know about that.
Yeah, I think, when comparing rates, a lot of what we do is to help people sort through the details of what's the best option for them based on what they're trying to do. And we make ourselves available to every applicant to talk through that. In the key terms, Paul, you said interest rate versus APR. So when you're trying to make an apples to apples comparison between two products, the APR, the annual percentage rate, is inclusive of any fees associated with that loan product. So at the end of the day, the APR is what compares the cost of the loan of one product to the cost of the loan of another product. The other important variable is the term, meaning how long that loan is paid off over. In general, the shorter the term, the lower the interest rate will be. Think of a 15-year versus a 30-year mortgage in the rates associated with those. The shorter the term, the less cost over time that you'll pay. And again, the interest rate being lower. Those are the two key components. When you think of what you're using it for, you really want to pay attention to the fees. For example, if you're going to be using a loan product that you intend to pay off before the term of that loan, then you want to ensure you have the ability to do that without penalty, and that's where the prepayment.
So it's a highlight of what you guys do is there's no prepayment penalty. You can figure out paying this off before the 5 years. There's no penalty for doing that, but you have the 5 years to complete your payment cycle.
That's right. And I'll just say lastly, I think we've certainly learned from our community that we want to ensure that we've done the research to get the best deal possible for the use case that we have. And in some instances, there can be some downside to that. If you prolong that search and look into a number of different options, if all of those options are doing what's called a hard credit pull, it can impact your credit over time if you have a lot of hard credit pulls on your report. And so as you go into the application process, asking whether it's a hard credit pull or a soft credit pull that will be done, the difference being hard credit pulls can negatively impact your credit score, whereas soft credit pulls will not.
Also, I like this learning. I'll ask you, Zwade. NBA is a much more fun acronym, but understanding FICO score impacts in lending decisions and waiting. So I've been waiting my whole life to understand this. So this is a big moment for me. FICO score impact.
Sure. I want to just kind of emphasize something that Kenton just said, though.
Sure.
A lot of our applicants fixate on interest rate, right? And to your point that Paul, that we're competitive as beings in medicine,
Yeah.
and we want to get the best rate possible. If the rate is higher, nothing else matters, and that's a fallacy, because the importance of rate and term are two critical variables. A shorter term loan will have a lower interest rate because by definition, that lender has a quicker repayment period, but it obligates the borrower to a higher monthly payment at minimum. So you're on the hook for a much higher payment when cash flow is your challenge for most of our use cases. When a longer term puts you on for a smaller monthly payment, even at a higher rate, but if there's no prepayment penalties, you can treat that longer term loan like a 3-year loan by overpaying and having less interest accrue, because any overpayment goes directly to principal, and so less interest accrues over time. And so longer term with no prepayment penalties is a way to get to a more humane monthly payment without being on the hook for that higher payment, even if the rate is lower, if that makes sense. Now,
I like it. Great explanation.
So the FICO process is a really complicated one with a number of variables that impact how well you scored relative to the average American. And so it's based on a bell curve. 850 is the maximum FICO score, and a prime score is considered to be 720 to 750. Super prime north of 750, subprime to be sub 700. Many lenders for an unsecured loan like ours require a minimum FICO score that puts you into the prime category. So they will not lend to someone with a 650 FICO without any kind of collateral to guarantee that loan. And in this economic environment, it's better to get a collateralized loan, which would have a lower interest rate if you have access to it. So if you're thinking about borrowing right now and you want to borrow for your business is cash flow positive, but you've got a crunch because of expenses and you're waiting for some insurance payments to come in, and you can use the asset of your accounts receivable to get a loan at a low rate, that's a good use case in a high rate environment. However, if you're strapped and you don't have the ability to use your business to back the loan, you don't have the time, you can't afford the time to wait for the underwriting to look at your business financials, your tax returns, et cetera. You want to get the money fast and you can repay it quickly, then an unsecured or personal loan can be the bridge there. Now, for all lenders in this category, they will care about things on your FICO report. The aggregate score I just described is one factor, but things like history of delinquent payments. So paying anywhere from 30 days delinquent and beyond is reported. So if you paid your lender 18 days late, it's not a black eye in your credit report. Once you hit the 30-day mark, it becomes a black eye. The next threshold is 60 days, then 90, then it's considered to be a charge-off or collections. And the impact of each of those milestones is more draconian on dragging down your FICO score. So a 90-day delinquency, 90-day delinquency is a heavier hit on your FICO score than a 30-day delinquency, for instance. They also will look at how much debt do you have outstanding relative to credit that you're allowed to have. So if across all your credit cards and revolving debt, you're allowed $50,000 in credit card limit, and you're spending $10,000, you're in a much better situation if you have 50,000 access and 45,000 spent. Right? The sweet spot, you want to be somewhere about less than 25% of your total allowable credit to not have it hurt your overall profile. And so that's another factor that goes into place here. Now, the frequency with which you're looking for money, so those hard pulls that Kenton mentioned earlier, when lenders see an aggregated cluster of a number of credit inquiries, it gives a sign of a borrower in distress. And what all lenders fear is being the last person to lend to someone who's going to spiral and file for bankruptcy. And so having a high cluster or high density of hard FICO inquiries is a red flag for most lenders as well.
What creates hard pulls on your credit? Maybe it's fun to, maybe that's a basic question for you guys, but like, what do people do to create hard pulls? Is this when they apply for practice loans and real estate loans? Is there anything else they do that creates these hard pulls?
So a hard pull, to be clear, saying the same language. Hard pull is what the lender does by checking with Equifax, TransUnion, or Experian to look at your credit profile. So you submit your social security number in an application form and you allow them to check your credit. And when the lender asks Experian to show your credit profile, that is that hard pull, right? They're looking at it. It's an inquiry that is recorded by Experian to say, Bank of America just pulled Zwade Marshall's credit report in the application for a loan. That's a hard pull. What we do is we don't ask for a hard report from TransUnion on our borrowers. We do a glance by where it's called a soft inquiry. So we don't want it to be recorded as us reporting to the credit bureaus for the application. We just want to get a glimpse of what the profile looks like so we can give a quick approval. And then when the borrower begins to pay us back, we report that to TransUnion so you get credit for on-time payments. And that often helps borrowers that are using our loans to consolidate or refinance credit card debt, right? So you've got $50K of credit, you're borrowing $50,000 on that credit card. You then, rates have gone up, so you're paying 29% APR on a credit card. You get our loan at, let's call it 11.9%, right? You pay off that credit card. So now that you've got 0 used on the credit card, 50 allowed, and you're paying an installment loan to us every month on time, your FICO score generally bumps up significantly afterwards.
So it sounds like a workout for your FICO score to change your credit card debt to Doc2Doc debt. Is that a good take home nacho that I kind of surmised there? Or did I mess that up?
There is one other component to that score, Paul, which is credit mix. And Zwade mentioned the difference between installment and revolving credit. Those are the two main types of credit. So revolving credit is something you pull from multiple times. So think of a credit card. You pay it off and then you use it again. You pay it off, you use it again. That's called revolving credit. Installment credit is a loan you take out that you make fixed payments on over a period of time. So think a 30-year mortgage, you make monthly payments over 30 years. So the credit mix, those credit agencies want to see that you have a positive history in both types of those credit cases. So it's not to say get rid of the credit cards and tear them up. It's actually a benefit to have credit cards, but and even more important than the credit mix, more heavily weighted than credit mix is how much of that allowable debt you're utilizing, like Zwade was saying. So the sweet spot when people are preparing for major purchases, think of folks who are a couple years out of training, are going to either buy a practice or buy a home and take out debt that is over a longer period of time and a larger number value. They want to get the best rate that they can over the period of that product. Shoring up your credit profile can certainly be done by lowering that allowable debt to utilization ratio, and also ensuring that you have a payment history both on installment and revolving debt.
Yeah, the key, just to point out, as we've worked together, it's pretty basic, but things you just can't buy certain things with a credit card that you need money for. So if you're a dentist any age or stage, having a $40,000 credit card can help you out of certain financial jams, but it can't out of other ones that you need. And it's just a good reminder why working on it's like offense and defense of your credit. That's my analogy for that here. I'm going to catch us up for a second. We're talking with the founders of Doc2Doc, awesome key resource and sponsor. I always want to be a talk show host and do this. So you can text lending to 215-543-6454 to learn more. My Nacho team's also dropping their link in the chat. Business versus personal borrowing. I know you guys kind of touched on that a little bit, but did you want to clarify or bring to life anything for our audience of business versus personal borrowing?
I think this kind of flows in well with the next point too, which is decision analysis to determine when to borrow using your business or use doing it personally. And as if you're a business owner, it's a perk to be able to have the business stand on its own and access credit. If the business is young, though, you'll require a personal guarantee from the actual owner, the doctor, to attest that they will be the one to cover the loan should the business not be able to make the payments. Now, the benefit there is if your business can tolerate the debt in that you can get an approval because of business cash flows, tax filings, you got the history there, then it's better for you to not have that risk on your personal credit profile. So over time, your business will have its own credit report and can access credit cards in the business where you can use it for business expenses and not worry about the revolving debt utilization on your personal credit profile. And it should be your goal if you own a business to at some point in time migrate all of your business debt that you're holding personally onto the business itself. So for our borrowers that come to us for a personal loan to support their business, they should be thinking consistently about getting that loan paid down or getting another business loan that's a collateralized loan using business assets with a better rate potentially to ensure the business speaks for itself and does not have the encumbrance on the owner's personal credit history by borrowing personally for the business itself.
Gotcha. So there's, it's you can add in what you would like to, Ken, but I think this is a topic that's very confusing to dentists at all ages or stages, but especially earlier in their career. When they first become practice owners, they have a tremendous amount of expenses coming at them in all different ways. Sometimes, I will share, people have an unrealistic expectations of dentists always having money in their bank account. You're making money, you're paying your team, you're paying your expenses, and you're doing it all again. And there can be times for a variety of reasons where your payroll that week is short and you don't take any money as a business owner. This could be something to help. Is that right, Kenton? Whether you're having a payroll challenge at your office.
Yeah, that's right. And Zwade said it well. I think when the option's available, generally putting the debt on the business is a better option at a very high level. The personal consumer lending is much simpler to look at. A personal loan, we don't care what it's for. There's no asset behind it. Really, we just look at the profile using in our case, some doctor specific metrics to determine what the interest rate is, versus a loan against the business has to look at the use case, what the opportunity is for the business, what's going to collateralize it, be it past revenue or a piece of equipment or real estate. And the downside to that is that it takes time. The upside is that if you get through it, generally you can have a better interest rate as a result of that collateralization. So for businesses that don't necessarily have that backing or that asset or that history, there are instances in which it could make sense to partially support the business with a personal loan. The benefit being it's quick. It's an easy process to go through, and again, the options are there in the future to when the business is more mature or when the asset is there, to pay down that personal loan quickly.
I think it's a good point. I mean, even in my journey, I had an awesome dad, sadly passed away a few years ago. We worked together as dentists. My brother worked with us. We were going to buy a second practice in 2011. I'll never forget. We went to the bank where we did all of our, receipts, all of our deposits. I mean, millions and millions and millions of dollars my dad had put through this bank. And I think we wanted to get this loan for this practice. And they made it this enormous deal where my dad's like, forget this. We're going to use a different way. He had some he had lines of credits, different things, but I kind of remember that experience. Not that they were doing something wrong, but they did make it do you guys have any money? We don't think you have money. And I'm I wanted to be we show up here every day with these deposits. Yeah. And I think that you made a really good point there, both of you, and my team's watching. Time matters for making things happen, from practice purchases to home purchases to sometimes the really messed up things in life where you need the money quicker than what you could wait for. So I think it's a really good point that you guys brought up about the speed in which you can be approved by filling out an application, getting, you know, approval in a short amount of time, and then really getting the funds in to use in a, I don't know how fast do many people get the funds, either Kenton and Zwade in general with Doc2Doc.
5 days.
Yeah.
5 days. Yep.
So I want to, if anyone wants to answer, I want to spend about eight or nine more minutes. I'll let you guys go. But if anyone has questions, Facebook Live or Zoom, Nacho team, just let me know if we have any. But I want to ask some questions. I want to finish with fun and frustrating things. You know, you guys do this. You know, you help people, you help dentists, you help doctors. What are some things people have used this for? Give me something fun they've used it for. You know, or building their career. Zwade, I'll take one from you.
Yeah, funnest one, fertility treatments. Then the kid was born, and we got the ultrasound. Like the borrower, the dad sent me. I like, it was one of those moments that I personally got goosebumps, and we shared it with our team that this new dad, after getting the ultrasound, thought it fit to send a text with the photo to the folks he borrowed money from 11 months before to start the fertility treatments. And so I think that's the funnest and one of the more proud moments for us.
That's truly amazing. I went with the surprise toppings of life because I've dealt with them. They're really frustrating toppings. You could think of another F word for it. Kenton, maybe what's a frustrating life topping that you've helped people with? You know, not necessarily celebratory, but they had to do this thing to keep on take care of their family or move to the next step. What's a frustrating topic?
Yeah. Well, you know, the people who share my experience, it still brings up that same fire in my belly when I hear that people are going through it, having gone through it similarly myself. So folks who are coming out of dental school, coming out of medical school with these promising careers ahead of them need to get from point A to point B, and more often now point B is a really expensive place to be. And sign-on bonuses don't come for 90 days. Not everybody has family they can call in to support them into their early 30s. And so being able to see people get their careers off on a really great foot in a way that takes away that stress that I felt and was really ashamed by as I was starting what I felt was a promising career, is really rewarding. But to your point, Paul, about the frustration, I still feel it in my belly that it's so common that as doctors we have to go through this. And you know, there's no easy way, no solution for it. You know, ideally we help, but again, the fact that this is the normal path still bothers me.
Yeah, I think you guys are just doing such amazing work. And then maybe another F would be flexible financial things. I mean, I remember from past ones, and I remember the word cash flash for real estate from Zwade and things like that. What are some flexible financial things that have to do with maybe home or business purchases or real estate purchases where you say, hey, Doc2Doc fits in and helps you with flexibilities? Zwade, tell me a little more about that one.
Yeah, I think as we discussed, folks that need to get a startup practice loan, oftentimes we'll need to go through that arduous process like your dad and you did back in 2011. And, you know, you got to go through that process. You got to hear them say, you know, it's going to take you 4, 5, 6, 7 months. In the meantime, you've got a lease to sign and a deposit to pay, right? So we allow you to do that to get it going. And because there's no prepayment penalties, when that loan gets approved 7 months later, you can repay our loan with that larger one. So you don't stop the contractors, you don't stop the CRM coming into the office and the equipment coming through. You do everything you need to get done with our loan to kind of enable that larger loan to work. But again, why you use it, it's completely up to you. We ask only for data recording purposes. And so most folks use our loan to consolidate high interest debt or variable rate debt right now. But like it's real estate investment. Getting that loan for that spec property is really hard in this market. If it's not your primary residence, we can help you get there. With our loan.
I like those three F's: fun, frustrating, flexible. Now, as we end up, tell me a little bit more about this residency match thing, or what is this a new product for you guys, or is that coming out soon? Or people, once they get into a residency, how can they connect with you guys?
Yeah, no. So we've been doing this for some time now, where you're eligible to get a Doc2Doc loan after you've matched into residency. We need to know that you're going to be going on to the next step in your career. And so we're doing quite a bit of marketing around the dental match, the medical match day, as folks are now contemplating moving from point A to point B, the more expensive point B, as Kenton said. And we wanted them to know that we're here to be a partner to that journey. We think of ourselves as a future USAA for doctors, right? Like the fact that you could have spent or deposited millions of dollars in a bank, and when you need money, they treat you like a stranger then. It's extraordinarily frustrating. And the challenge is that these big banks, for you to impress them in terms of who you are, you need to have small business for BFA is 50 million in revenue. That's their small business category. So we're a rounding error to them. And what we believe is that we want to take care of our community at the time that they're most vulnerable, at the time when no one else sees the vision, because we've lived it ourselves. And the one thing we haven't discussed tonight is that $8 million of the dollars that we raised so far came from doctors, right? Like this is truly a peer-to-peer community, like the equity capital, the kind of the bridge capital that funds, a part of these loans comes from doctors. And so we're able to have that flexibility because our investors believe in the mission, they've lived it themselves, and it's our job to be empathetic and to understand what folks are needing.
I absolutely love that. I see people on the Zoom. There's advisors watching, and then I know friends, people knowing that you guys exist. I mean, that story about the fertility treatment is it's just so inspiring. I love working with you guys. As we end, people can text lending to this number to learn more. Text lending to 215-543-6454. But as amazing founders, if someone wanted to reach out to you, Kenton, just to ask you about anything, what would be the best way for them to reach out to you? We'll put it in the comments, but if you would also say it for this, so people listening can get it.
Yeah, they can reach out. They can reach out to us directly. Our email is Kenton at Doc2Doc.lending.com, and same for Zwade at Doc2Doc.lending.com. We're happy to speak with anybody through what they're trying to achieve and see how we may or may not be a path to achieving that. Anybody who's interested in getting their own personal terms can do that through our webpage, which I believe you posted the link to the application.
We're going to put the link there, and people can reach out to us at dentalnachos.com. So appreciate this. This is so inspiring. When you get us all Facebook Live, we'll still hang out here. Nacho crew, this is the Doc2Doc Lending Group. So glad to have you on.
Thanks so much, Paul.